Hello, everybody. Thanks for coming to Crypto 101. Today with us, we have Sean Stapley from Penrose Partner, and he's going to be the speaker today. We also have Eric from the Ben team, which is the Blockchain Education Network, and he's going to give a brief intro of what Ben is and what they do and how you can get involved.
Thank you, Alex. Welcome, everyone. It's great to have everyone here for this event. And thank you, Alex and Miami University Blockchain Club for putting this together. So the Blockchain Education Network is a network of blockchain clubs at different universities all around the world. We have over 80 different blockchain clubs, just like MUBC here, at all different universities. This network of students creates content in different languages, hosts events. There's a lot of mentorship opportunities. We're basically open for any student that wants to join this intercollegiate network and learn about blockchain, talk about blockchain with other people, potentially get jobs in this space or start their own companies in this space. So if that sounds interesting to you guys, we'll drop a link to join the Ben USA Telegram group and also a link to sign up for the Ben newsletter so you can keep up to date with more events like this that, this is an intro like Crypto 101 general, but you can learn a lot about DeFi and blockchain for enterprise, blockchain for medical records, for healthcare, for certifications. What is blockchain good for? And if you're interested in trading, there's going to be a lot of trading workshops as well and opportunities to get involved there. So whatever your interests are in blockchain, Ben is the community for you. So, and feel free to reach out to us with any questions that you may have, or if you're trying to get a job in the space or trying to find some mentors. That's something that Ben helps a lot of students out with. So we'll love to see you guys join the Blockchain Education Network, and please join us in the chats below.
Thank you, Eric. So I'm going to hand it off over to Sean, and he'll get us kicked off here.
Absolutely. Well, gents, thank you so much for having me. It's a pleasure to be here. And hello to everyone that's in the room. So let me share my screen so let's get this kicked off. I think it should be. Can I get a thumbs up from Alex? Can you see yours? Excellent. So welcome to Crypto 101 with Penrose Partners, or at least one of the partners here. So my name's Sean. I've been working in the space for about 6-7 years professionally. But today kind of want to set the stage a little bit for how do we even just start talking about crypto? How do you get involved? How can you learn about it? And really to try and give you guys a platform from which you can dive into really any aspect of the crypto sphere. There's a lot of different ways that people have got involved. Much like Alex said as well, if you guys want to have further conversations, happy to jump on a call, happy to talk around internships and things like this for the future. The more people involved, the better. But a little bit about me first and foremost. Why am I at all talking to you guys around this? So I am one of the founding partners at Penrose Partners. Myself and my co-founder Karem started Penrose about 2 years ago now. Prior to that, I'd been working actually at a blockchain consulting firm based out of Toronto, up in Canada. And a lot of the work that we'd done at that time was actually diving a little bit more into initial coin offerings around really kind of growing the space and, the first big bubble, as people thought that it was called at the time. But my background is I'm actually born and raised in Bermuda, where I'm presenting from today. Moved to Canada in 2012. I actually went to McGill University up in Montreal. And since graduating about 5-6 years ago now, time flies, I've been working in blockchain. So, my work has been very heavy in fintech, in startups, in a little bit of venture capital. But, my first experience actually working with Bitcoin was buying my first winter coat in Canada in using Bitcoin. So it's a very, very expensive piece of clothing now in hindsight. But it was a good way of getting actually involved to use the space. But how did we end up here? I think there's a lot of people that are hearing about Bitcoin, about blockchain, about everything for the first time, and it can be a lot to just try and dive in, to understand the news, to figure out where do you fit within this ecosystem. And at a high level today, I just want to get you guys up to speed with how did we get here, and really from our perspective, where are we going from here? So as I said, look, don't want to bore you guys to death with a history lesson here, but we will very much set the stage for where did Bitcoin come around? Why did it make such sense at the time? What's happened since Satoshi Nakamoto has appeared and then disappeared again? and open it to Q&A. So if you guys want to take this conversation in any which direction, I'm happy to explore pretty much any part of the industry. But let's get started. So from a high level before, the reason that Bitcoin made a lot of sense is that for all the reasons that we've all believed that money has made sense. Money very simply came about because we have to find a way to solve for the coincidence of wants, which is that if I have a goat and I want to trade for wheat, unfortunately, I need to find some wheat farmer that wants to take goats. This doesn't make a lot of sense. And so the barter economy quickly realized that we need some form of money in order to be able to transact at a global scale. So what made sense? Well, that's really where we got into gold, right? Store of value, it holds itself over time, it's easily transactable, and we can measure ourselves out in a unit of account. I can price out my different goods and figure out what makes sense without having to figure out how many goats something is worth. But overall, gold made a lot of sense because one, it was scarce, right? We got to go and actually physically dig it out of the ground. It has to be mined. It's easily divisible in the form of coins, and it was globally accepted. And Bitcoin, right off the bat, basically fits two of these ever so nicely. And we'll get into kind of a little bit more around, how you end up mining Bitcoin. But we're getting to a stage where Bitcoin is becoming much more of an acceptable form of payment around the world. You guys have probably seen things like noticing that Elon Musk and the Tesla team are now taking Bitcoins for payments. And we are moving into a space where a lot larger institutions and, in our view, governments are going to start transacting in Bitcoin in years to come. But a lot of this comes around of, where did Bitcoin come from? How did we end up with this situation where, everyone and your grandmother is talking about it? This is a horrendously complicated looking graph, which just basically shows the difference between what we think of as the stock market looking great and what actually happens. And all in all, if you look at the graph on the left-hand side that we have here, this is what things look like for the last 20 years in the stock market. And it looks like things are going pretty well. But if we look at the same graph on the right, priced in gold, we actually get to see what the stock market looks like in terms of actual value. And when you turn off the money printer and look at the actual value that's been created in the economy, we see that we're actually not even close to where we were 20 years ago in terms of actual benefit to society. So with this in mind, and with the global recession in 2008, 2009, we ended up in a situation where Satoshi Nakamoto emerged. Now, this is really where this newspaper that you see on the right is actually the title that's quoted in the original Bitcoin Genesis block, the first message that was left by Satoshi Nakamoto. And very simply, it says, "Chancellor on the brink of second bailout for banks." So this cryptic message was left as Bitcoin was beginning to be developed. And it's one of the signs that we have for Satoshi Nakamoto's intent of saying, the banking system is not working, and that's why I'm presenting to you something better. And for those of you who are looking into the space, one of the big questions is always, who is or was Satoshi Nakamoto? The answer is truthfully that no one knows. We have many guesses, and there have been people over the last few years that have claimed to be Satoshi. But Bitcoin's pseudonymous creator is actually completely unknown. At this point, there's a lot of guesses. The general consensus seems to be that it may have just been a team of people that were working together in order to bring about this new financial system. But overall, Bitcoin emerged onto the scene in 2008 when the white paper itself was actually released to a very select group of crypto punks and people that were heavy in the cyber security and the hacking spaces. But that's when really setting the stage right after the financial recession was when this came about. Now, there's a lot of discussions around, the future of Bitcoin being, what is it? What exactly, exists when you say that, I hold Bitcoin? What does that mean? Well, Bitcoin very simply is a decentralized value network of transfer. We're able to pass around money around the world without ever having, some sort of trusted intermediary that actually is able to process the transactions as you would think about in a bank. So for example, if Alex and I have, go for beers and I end up owing him $20, well, with Bitcoin, I'm able to send him money without having to be involved with anyone else in the process. Very simply, I'll post out my transaction using Bitcoin to the network, and the Bitcoin network will process itself to be able to send it over to Alex. He'll see it in his wallet, and we've managed to transact value around the globe without having to trust any bank, any intermediary and any payment processor. Now, part of the discussion around all of this really comes to say, is Bitcoin meant to be, as many think, this store of value, this digital gold, especially given, it's got a finite supply and it's very difficult to create more. There will only ever be so many Bitcoin that exist. And in this case, 21 million is the hard limit. Mathematically, there can never be more than 21 million Bitcoin in the world. It's created through a process, very simply, of solving complex mathematical problems. You'll turn on your computer that you're mining Bitcoin, or in the current days, you actually have to run very specialized mining rigs, and your computer is going to essentially plug away trying to solve the problems. When one of the problems is solved, you're rewarded with those Bitcoins in the block. And so we won't go too heavily into the technical details today, because while it's important to understand at some level, all you need to really think about in your mind is that Bitcoin is able to guarantee that no one can double spend money. No one can say that, oh, I actually sent the money to Alex, but meanwhile, I've sent it to another of my friends, and being able to double spend this, which is really the problem that Bitcoin managed to solve. Which brings us to where people weren't sure about, is Bitcoin then going to be a currency for payments? Because at the end of the day, it's highly divisible and we can exchange it around the world. But from a technical level, this is where a lot of the discussion has come about in the last 5 or 6 years. And people aren't sure whether we're basically mining our digital gold or whether we're bringing about the new world order of PayPal. And so lots of discussions there, and there's pros and cons on both sides, but Bitcoin overall has a lot of potential. But in the last 5 years, we've seen also the growth of many more blockchains that have existed more than just Bitcoin. One of the main ones that likely many of you on this call have heard about is Ethereum. And Ethereum came about in early 2015, 2014, and became to really grow into dominance in 2017 and beyond. And one of the things that Ethereum has essentially managed to build on top of the idea of what Bitcoin laid the groundwork for is being able to have programmable money. So instead of us simply having, just the ability of passing, one Bitcoin between ourselves, we began to be able to develop a bit more of a complex ecosystem. We were able to build things that said, if this, then that, which led us to get to a situation where with Ethereum, we can start building on things like payment processing systems. We're able to build out, a whole other system of being able to say, I want to go a little bit further than just transacting. I want to actually grow an economy around this. And that's really where Ethereum has stepped in. Now, Ethereum came about because of the creator known as Vitalik Buterin, amongst many others that were involved in the process. But as I said, one of the things that really came to light with this is that Ethereum delivered programming. It gave us the ability to have programmable money. Instead of just simply my account owning X and Alex's account owning Y, we're able to say, for example, upon this date, I want you to send this payment to Alex if my account is more than this. It allowed us to begin to develop a much more robust economical model and to begin to really see what could happen next. Some of the initiatives, though, that have grown from here go far beyond just looking at using this for currency transactions, and in fact are able to bring into other areas. We've got ones like, for example, Gnosis that you see there is one that's a healthcare data provider. We've got Brave, which is actually the browser that I'm using to present this on, is still based on this idea of using blockchain for more than just currency. And there's many, many more use cases that are coming to light now. Most notable of which recently is Uniswap, that adorable little pink unicorn at the top there, which is actually being able to provide a decentralized way of trading all sorts of things like NFTs that you've probably heard about, and much, much more. But from this grows this entire ecosystem of how are we going to develop a blockchain economy for tomorrow? And this is really where we've had everything from the growth of different blockchains, having this base layer that has some benefit over different ones, such as Bitcoin potentially being this digital gold, Ethereum potentially being this idea of a programmable economy, and then things like Cosmos, which are meant to basically link the two and allow us to begin to have a much more complete ecosystem. But we've also had the growth of things like utility tokens. And we can dive a little bit into that if you guys want to talk around some of the use cases. But that's ones that you may recognize in the space, like Brave, Bancor, 0x, and MakerDAI, all of which are built with a specific purpose in mind. And that's the beauty of these utility tokens. They're meant to have some specific purpose that you can then take and say, all right, I've built this if you'd like to be involved, buy some of my tokens and get involved in the ecosystem. And that's kind of the beauty of the blockchain space, is it really is open to anyone to come in and get involved. But some of the other advantages that we've seen has been the growth of things as simple as stablecoins. Very simply, just having a digital representation of a coin that remains unvolatile and is completely, meant to be stable. Things like the USD coin are just a digital representation that if you have, dollars in your bank account, you could put those same dollars onto a blockchain and be able to transact as freely as you would with Bitcoin. But there's other things. We've seen commodity tokens being, just essentially have a digital virtual. We've seen tokenization, where you're able to take something like a real estate property, for example, and break it down into fractions and put that on chain. So there's a lot of different areas that this ecosystem has seen grow up in the last few years, and we really are just at the beginning. So to give you an idea of just how early this is as well, the first time that I actually gave this presentation in Bermuda was actually at the 1 year ago mark. So I got a lot of people calling out saying that, well, the bubble's burst. We've seen the growth of it. It's already gone up to almost $1 trillion, and now we're down to 282 billion. And well, as of today, the total market cap of the space is actually higher than this. We're now at about 1.8 trillion. And to say what a ride is really not to even begin to scrape the surface of just what we've seen in the space. But one of the things that, we're very excited to have seen is that this cryptocurrency market opened up the ability for many people around the world to participate. It could be everything from you actually getting involved in, as I said, putting your money into some of these projects that you believe, as we've seen with what's called an initial coin offering. I, for example, would like to contribute to a project that Alex has made. And so Alex would create a token, and then I'll give my Bitcoins in, and in order to receive a share of his token, of his project, whatever it may be. So it allowed for what you can think of as essentially a global Kickstarter program, allowing for people to actually get involved with the space without needing to go through a complicated process of accredited investors, of going through venture capital, of all of these things. And because of that, we saw a huge boom in as you can see there, over on this side at January 2018, when we saw Bitcoin spike to the price of $20,000. And although that might not sound like an awful lot right now, as we approach 60K, it was an awful lot in the space to see it go from, well, more or less, this is where I started professionally working in the space, and getting up to there and then seeing it all crash and plummet again. And try running a blockchain consultancy firm in that time, it's a little bit of a tricky situation. But all this is to say that, when we're looking back at this, it's easy to say that, oh, it was inevitable. And it's definitely been a tricky ride for the last few years. But, in a few years from now, we do very much predict that we'll look back at even nowadays and say, wow, we didn't realize just how early we were in the space. So for those that are looking at this and thinking, oh man, I really missed my chance, absolutely not. We are still so early in this space. So as I said, if you want to learn more, please do reach out. But as we'll dive in a little bit we can talk about stablecoins, but this is very simply having a dollar on blockchain is a way that we're able to, more or less easily facilitate global trade. One of the things that, as boring as it may sound, of just having a $1 on chain is equal to $1 in your bank account, the beauty that this provides is that you're able to more easily move money around the world without needing your bank. And as I'm sure many of you are frustrated with banks in the past, earning your 0.5% annual interest isn't exactly going to end up getting you a high savings rate year after year. What stablecoins have been able to do is actually be able to create neobanks, areas where you can put your US dollar, for example, into something like USD coin, just again, a digital representation using blockchain of the US dollar. And if you put these into one of these neobanks, you actually earn interest of about 10% a year instead of getting 0.1%. So we'll talk around some of the areas that you can do that, but not to sound like this is by any means financial advice, as a general disclaimer, this is still a very risky industry, and don't invest more than you can afford to lose. But we do believe that this is really a lot of the ways of seeing the beginnings of the future for a new system of banking. But stablecoins are just one of the areas in which this has grown. We've ended up starting all the way over on the current system on the left-hand side, being very centralized and requiring an awful lot of partners involved, banks, clearing houses, your local credit unions, and all these sorts of organizations. And then we had the jump all the way to the right-hand side, with Bitcoin, a completely decentralized system that is meant to just be peer-to-peer value transfer. And slowly but surely, we found our way somewhere in the middle of having organizations like the Ethereum Foundation that help run a decentralized network. And then from there, there's a lot of growth in the space of, areas like central bank digital currencies, which is governments now deciding that they want to use use blockchain for transacting their own currency, but also seeing groups like Cosmos, which are actually trying to basically link different blockchains between each other so we have a more complete ecosystem. But all of this, you might also be asking, how do I get involved? How do I actually own crypto? How do I buy it? What do I actually get involved with? So I'll pause for a quick second as well. And if there's any questions, or Alex, if you have anything you wanted to add, please feel free to jump in. But I think as well, there is also the chat here as well. Excellent. Thank you for the Ben team sending around the newsletter and the Telegram chat. But if anyone wants to ask anything, please do feel free, jump in, raise your hand, whatever you guys would like to do. Or we can talk a little bit around, how do I get crypto? Where do I hold it? I think we're good. Sounds good. So wallets in custody. So let's say you've actually managed to take the plunge. You're ready and willing to put money into crypto. Well, what do you do when you actually hold it? Well, that's where your wallets come in. And a wallet, very simply, is a place where you store any form of digital asset. And there's a couple different types. And for reasons of making sure that you don't lose it, it's important to know the difference between them. And we've got ones like everything from hot wallets, which is meant to be an active wallet that's connected to the internet and more easily able to move funds around, to cold wallets, which literally look like a USB stick that you keep hidden in the back of your closet and you never touch. There's also multi-sig wallets, which means that if Ben was looking to have its treasury, for example, in crypto, you might need multiple signatures or a multi-sig wallet, meaning that there need to be several people that have to say yes before a transaction is moved. But if we're looking at, how do you guys actually get up and involved? One of the things that you'll need to have is some way of having a hot wallet. This could be everything like having an online account at, one of the major exchanges. You may know some of the names like Coinbase, which I would recommend probably for any of you that are in the States. But there's also ones we work with, like Bittrex, for example. There's also ways of having desktop wallets that you don't necessarily want to trust one central company to hold your crypto. And so you can have it set up on your mobile phone, you set up with Exodus on your desktop wallet. But it's a way to more easily link between having something that's buried in your closet, as we see with the cold wallets, and being able to have something that's actually sitting essentially on the internet and ready to move at any time. But if you're wanting to just invest in cryptocurrencies and put something to the side, the type of thing where you're not looking to trade on a regular basis, you just want to put a little bit of money in every month and leave it, that's where a cold wallet comes in. And that very simply does look like a USB drive. We've got things like companies like Trezor and Ledger, which are two of the main ones that have developed these solutions over the last 8-9 years. But very simply, if you were to buy crypto, you would send it into your little address, and you're going to then store it essentially on this USB drive and put that, in a safe deposit box, store it, in your sock drawer, whatever it may be that you want to keep this in a place that's private and secure for you. And there's ways as well we'll talk around, making sure you don't lose it, or, what if your house gets broken into? But that's realistically the most secure way that you're going to keep your crypto for most of us that don't have, millions of dollars in Bitcoin, or, a couple hundred Bitcoin that we've managed to get in from the early days. But, a lot of this comes in to say as well, the secret behind a wallet is essentially known as having the private key. And there's a couple ways that you're able to keep this, all of your information and all of your crypto secure. There's the first option of having your own wallet, as we talked about, which you'd call self-custody, which very simply means that, you are your own bank. But for many of you that are just getting into the space, or for those that, have tried it, it's not always the easiest process. And that's the reason that we often rely on these third-party providers. That's where you trust a service like something like Celsius, which is one of these neobanks, as we've discussed, which is essentially being able to hold your crypto for you. So it means that they're the ones that are actually going to hold your coins, they'll hold your keys, and they're the ones you're trusting to keep it safe. Now, obviously, you need to have a certain level of trust, which is why you only ever want to put them into a company that you believe in, that you think that they have a good insurance policy, that they're trustworthy, that the team is someone that you believe in. Because at the end of the day, if you don't hold the private keys, which is essentially a string of letters and numbers, which is the password for a wallet, then they're the ones that are able to move your money around. So you need to be very careful of trusting who you are giving your coins to. And then finally, if you're looking at getting extremely secure, that's where we talk about institutional custody. And I won't dive too heavily into this, but if you guys want to learn more, one of my favorite companies that I've seen do this in the space is called Knox, Knox, exactly like Fort Knox. And what they've done is essentially build this system, which for institutional clients is pretty much as secure as you can get. So they use a combination of multiple locations, multiple signing authorities, and a very complicated system of hardware wallets. That means that not even Knox can actually access the client's crypto without their explicit permission. So when you look at things like banks looking to move into the space and buy crypto, institutional custody like this is really where it comes down to. Now, if we're talking around, what is a wallet though, right? You get your little hardware drive, you want to actually get up and running with it. Well, how do I give my address out? What am I meant to give out? How am I meant to say, hey, Alex, you owe me 20 bucks. Here's the address you can send it to. Well, that's your public key. That's very simply something you can throw up on messaging boards. You can pass around to friends. You say, this is the address where you can send me money. And anytime that someone sends you that, it collects itself in that wallet and it sits there waiting for you to use. But what you need to keep secret and what you never post anywhere is your private key, which very simply, as I said, is you can think of like a password. It's a long string of numbers and letters that you put in to sign your transactions so that anytime you want to transfer funds, that's the way that you're actually saying, I am the owner of this wallet and here is my proof. And how does that work? Basically through a very complicated system of cryptography, but it allows for you to be able to trust that as long as no one else ever has your private key, there's no way that they can move the money that is sitting in that wallet or in that public key address. And finally, one of the things to keep in mind is, what if my computer died? What if I don't have access to this private key? That's where you have another backup, mnemonic. And very simply, for every wallet, when it's generated, there will be what's called a seed phrase. So that's, generally 12 or 24 words, depending on the wallet. And that's the sort of thing you write down on a piece of paper, fold that up, write it down again, put it in 3 different places, and keep that secure. So just in case, for example, to give you an idea, if your house got broken into and someone got your hardware wallet, your little USB, the good news is that 1, they're not going to be able to get into that without having your private key. And 2, you would always be able to access the funds that are stored on there if you have the mnemonic. And that's the reason that this seed phrase, these 12 or 24 words, are so crucial. Because if you keep that securely written down somewhere, no matter what happens to the physical hardware, you'll always be able to access your crypto. And it's the reason you might have seen one of the earlier articles in the space talks about, with this, you can literally cross borders with $1 billion in your brain. Now, would I recommend putting it in your brain and only there? No. However, it's the idea of being able to have multiple layers that, for my crypto, for example, I store some of it on a hardware wallet. I keep it locked up in a secure location. But even if someone got into that, I have different backups in 3 locations that I'm able to always go and get, and then to put those 12 words into a new wallet and access my crypto. So there's different layers of it. And I hope that kind of clarifies a little around, what is the public key? How do I send money? What is actually involved? But very simply, at the end of the day, public key is where people can send money to you. Private key is what you use to prove your ownership and actually move the money from there. And so really comes down to, where can you mess up? What can go wrong? And the first one is very simply, you forget your recovery options. If you forget that 12-word phrase, well, sorry, there's no customer service for Bitcoin. This is really where it just comes down to, you have to be very careful when you set up wallets, because you don't want to get to a point that you can't retrieve your money. I'm sure many of you have seen many of the cases where, some poor soul has thrown away a hard drive and they didn't ever write down the seed phrase. There have been cases recently where someone's trying to comb the landfill because there's $400 million sitting in a hard drive somewhere and they just can't access it. And that's why you need to write that down many, many times and put those in a secure place. But even more so, what if, for example, someone got into your computer and was able to hack into your drives? Well, they could steal your private key. And that's another reason that, you don't keep things encrypted on your computer in a file just sitting there on a desktop. You really need to be keeping these in a secure wallet. And I've got a couple points of, I'll follow up and send you guys some of the recommended providers, as it were, just to make sure that, in terms of ones that we'd recommend, here's the way to get involved. But there's also the idea as well of, talking around using another bank. Third-party cybersecurity risk is always a risk in the space. There have been cases like Quadriga CX up in Canada. You guys may know the name Mt. Gox, which was a large exchange that was actually hacked and had a lot of funds stolen in 2014. But essentially, anytime you're trusting another company with holding your crypto, it's much the same as a bank having it, and you need to trust that they have proper security procedures. But the difference between a bank having their money stolen and having your Bitcoin stolen, there is no customer service and there's no one that's able to just hit the back key. So with crypto, have to be very secure and make sure that you know exactly what you're doing in terms of your backups. But that's where we get to the easiest option, and really where a lot of you that, if you want to get into the space, are going to actually be able to get involved. And that's with using an exchange. And very simply, what is an exchange? Well, it's a company that is able to exchange one crypto for another on your behalf. It's the same thing as setting up a bank account and trying to trade stocks using one of their brokerage accounts. You're essentially just saying, I would like to do this, and they'll act on your behalf. Now, when you're looking to actually get this up and running, as we said, one of the things to keep in mind is whichever exchange that you're giving your money to, they're the ones that are holding your crypto on your behalf. And so you have to be careful, make sure you trust them, make sure that they're legitimate, and make sure that they're set up in a country that you can actually work with them. You guys in the States, it's let's say, to be put it politely, in case my lawyers ever find this video, there's a lot more risks involved with dealing with security laws as an unlicensed entity in the States. So that's why my recommendation for a lot of you, if you want to get involved, would be working with Coinbase if you want to look them up. Don't worry, I'll shoot you all these links, as I said. But one of the easiest ways is when you're getting up and running with crypto, realistically, you just want to be able to say, I'm going to buy some crypto from my bank account, send it to somewhere, and voila, I own Bitcoin. Now, what are your options here? Well, there's a lot of choices. And this is really where you can get into a lot of the nitty gritty around, who says what's better and really where exactly are, your preferences. And it comes down again to kind of understanding, everyone's individual risk. But realistically, the ones you see at the top left, all of these centralized exchanges are ones that I've either worked with or I would say are pretty trustworthy. And, we'd be comfortable saying, go to them and set up an account. And with any of these centralized exchanges, again, it's just think of it like a neobank. You're going to log on to something like Binance or Coinbase, make an account, you send them money, and they'll buy crypto on your account. And from there, you could buy Bitcoin, you could buy Ethereum, you could buy thousands of different assets. And it's really up to you to decide which ones you want to put your money into. But there's also ones that are called decentralized exchanges. And that's a really interesting area that's growing much more nowadays. The most common one you might know about is called Uniswap. And very simply, Uniswap is a bank with no one behind it. Uniswap is a bank that runs entirely on code. And it means that whenever you're transacting with them, very simply, you're putting an order out there, the code is executing it, and it will return the money exactly where you tell it to. So obviously you want to be very careful, make sure that you trust them, because again, there's not even any customer service for them. All you're relying on is code. But it is one of the areas that we're seeing a lot more growth in the space, because a lot of people in crypto don't necessarily just want to trust a Coinbase or a Binance, because at the end of the day, you're just transferring trust from using JP Morgan to using Coinbase. And really, if we're trying to get away from these central organizations having control over our money, you want to move it to something like a decentralized exchange. There's also ones that we won't touch on too much today, but given you guys are finance students, security tokens are a super interesting area of just essentially saying we will move existing securities, your traditional US stocks, onto blockchain and be able to transact them freely as though I was trading with a brokerage account. But again, without all of the heavy infrastructure that's necessary for a bank to run, we're going to just run using technology. And it's an interesting area to dive into for sure. But centralized exchanges, this is where we figure out, why would you use it? Well, very simply, it's the easiest way to get involved in crypto. You have a lot of liquidity sitting behind them, but they do have high fees involved compared to a lot of the other parties that are in the space. Now, you pay for this, but at the end of the day, they're trusted. You can take a look at them and say, I know who's behind it. I know there's customer service that I can access. There's often a large choice of listings and a large choice of crypto assets that you can, dive into. But you also have to keep in mind, there are risks involved in this. And one of them is very simply that these guys are your new point of failure. they're the new space at which if someone gets hacked, that's your money on the line. Now, has it been from outside? Or in some cases, it was actually from internal employees that were going about this. And again, keep in mind, you're only as secure as the exchanges. So if you're the one getting sent a phishing email and you accidentally give out the password to your account, all of a sudden hackers are able to act on your behalf and essentially move your funds out. And as soon as a transaction is done on blockchain, it's final. There's no way to just roll the time back and be able to say, okay, I made a mistake. I didn't mean to send my money there. It's gone. So that's just one of the areas to be very careful is, every time you're sending money, you got to triple check it. But at the end of the day, that's one of the risks involved. But it also means that it does take away any risk of having to deal, using blockchain, you can take away the risk of having to rely on one central authority. And that is where decentralized exchanges step in. There's been a lot of areas in the last few years that we've found central exchanges have really fallen flat. And one of the main ones has been a lot of accusations of market manipulation. Anytime, for example, that the Bitcoin price will reach a new high, Coinbase goes down. Now, it works like clockwork. So anytime that you can say there's going to be a new high, you'll notice that Coinbase is going very slowly. And it's one of the arguments against them is that centralized exchanges are the ones that are still manipulating the space. They're the ones with a lot of money, and they're able to tweak the market as they see fit. But if you work with a decentralized exchange, there is no company behind it. It's just code. It's saying, oh, you want to do this? I'll do this for you. And that's the beauty of it. There is no central point of failure. And it means that at the end of the day, the user, all of us, is able to actually maintain the custody and to hold our own assets. So for example, if you have that little USB drive I'm talking about, you're able to plug that into your computer, and using something like the Exodus wallet, you can actually transact using a decentralized exchange, trade some of your crypto for a different crypto, unplug, and you are just as secure having never let the crypto leave your wallet. That's the beauty of it. It's also more private because in a lot of these decentralized exchanges, you're just plugging in and transacting with it. And although there's a record on the blockchain of seeing, who transacted where, there's no way for them to link that back to you unless you've already done, KYC procedures and identification. So it's a more private way of being able to actually go about transacting. But there's still some shortcomings. Not all that glitters is gold. And it does mean that using these systems, you tend to end up a little bit slower than some of the centralized companies. And additionally, you do run into some problems around liquidity and maybe not having all of the assets that you want to buy. And finally, using fiat functionality, there's no way I'm recommending any of you start with a decentralized exchange because there's no way for you to put your bank account, send money somewhere and get crypto. It's just not a thing that decentralized exchanges are able to do at this time. But it is getting there in the future, and we'll see what develops. But a lot of this is all to say that, how do you get involved? First things first, get yourself up and running with an exchange, such as one of the Coinbase or the Binance that I would recommend. And then from there, when you start getting a little bit more comfortable with the space and try some trading on your own, or even just, learning more about the market, that's when you can start buying yourself a hardware wallet. You're able to store your assets securely and confidentially. And then from there, you start getting a little bit more involved. You start looking at, okay, this is a new company that's coming up in the space. I'd like to contribute to their offering. I want to own a portion of the network that they're building. And from there, that's where, you could, for example, have some of these cryptos that, do go 100x and you make an absurd amount of money. But, it's a risky business, right? It's not the sort of thing that you can just expect to win all the time. I've been burned many times in the past 5-6 years. And, everyone always likes to talk about how, Bitcoin has seen a meteoric rise. But you don't know the struggle until you've seen 80% of your net wealth knocked out in the span of 3 days. And it happens. So again, you're not looking to trade anything of that you're not comfortable losing. It should be money that, you have put aside that you'd like to invest in something. And we can talk a little bit afterwards around, what sort of cryptos, do we recommend? Which ones are a little bit more stable and we think will be around? But at the end of the day, if you're just saying, I want to get some exposure, it all comes back to Bitcoin. Buy a little bit of Bitcoin and leave it. And if you're not trying to beat the market and you're not trying to make money in the next month, if you leave that for 5 years, I would happily bet you one Bitcoin that it will be higher than it is right now. So all that to say is that's a quick little overview of the market, how we got here, what's going on. I'm happy to answer really any questions at this point in terms of, anything you guys might want to chat about around, how do I get involved? If anything wasn't clear, we can talk about the technical. Most people tend to want to avoid that part. But just to hear from you guys, I hope that was helpful, and happy to chat.
Oh yeah, go ahead, Lucas.
Yeah, I just have a quick question. So me and another friend are looking to set up a small fund. We've got some investors that are looking to get into the space, but don't want to manage it actively. And my friend, he's been a technical trader for about 5 years. Essentially, we're looking to find a platform at the moment where we can essentially we can trade, but they have to, I guess, verify if we want to make transactions out of that wallet, just to have a bit more trust there. So I was wondering if you knew of any exchanges that maybe have some type of two-factor authentication where we're able to trade, but we're not able to transfer money in and out of the account, I guess.
Mm-hmm. So essentially, just to make sure I'm getting what you're saying is, you've got X number of people that want to give you some money and you would like to trade on their behalf. But you're free to trade within any of the cryptos that you're looking for. But if you want to move money out of that, that's a separate question that has to be discussed with investors.
Yeah, exactly.
Right. First thing I would say is you definitely need to talk to a lawyer, because it's depending on the amount you're looking at. If you have a family friend that's done a law degree, they'll tell you that it's a very delicate space to be trading other people's money. And especially if you set up a fund without the proper procedures, it'll look like it's basically personal transactions and you're on the hook for the tax liability. And believe me, I've been hit by those before. You don't want that. Definitely eats into some profits that you expected. So one of the things to keep in mind is, it depends who you're working with. If it's just friends and family minute, and again, this is not financial nor legal advice in case my lawyer finds this, but if it's just you dealing with kind of some family money, it's the sort of thing probably okay to kind of take the hit on the tax and figure it out with them behind the scenes, and everyone's okay and the IRS doesn't come after you. But if you're starting to deal with kind of larger amounts, or if very simply you have outside investors that you're not related to, it might be a business connection, things like that, that's where you want to start looking a little bit more into kind of legitimate fund structures. And there's ways to spin up a light fund, as it were. I'm not sure for the States. My experience is very much not for trying to avoid the SEC coming down on me. But if you'd like to have another chat, definitely something we can do. So all I would say is, platforms you're looking for, Coinbase Pro is probably your best in terms of kind of more expansive trading and different structures. But yeah, Coinbase Pro would be my recommendation. They will likely be able to have a way of doing as you said, definitely have your two-factor authentication on for any withdrawals. There's ways, for example, you can set it up that, for example, all of the exchanges that I operate on, and right now I only use two, Binance and KuCoin. Between the two of them, you can put what's called a whitelisted address, which basically means that the only address that I can ever withdraw money from has to go to this address. I can't. So if a hacker got in, for example, and was like, "Oh, I'll put my money here," you can't do that. I have to physically get a text to my phone and get the two-factor authentication. And the withdrawal access in this case goes actually to another account of mine that's savings. So you want to put up these layers of protection just in case. But in terms of ones that would be kind of multiple people that need to, or if your investors are the ones that have it, you could put like a trustee, for example, is the only one that can ever do the two-factor authentication for withdrawal. And that would have to be someone that isn't you or your trading buddy that would have access. That would probably be the way that would work.
Yeah, it makes sense. It's mainly one investor. He actually runs a venture capital fund, but he's looking to invest into this space as well. We've built a really good rapport with him, and it's someone that I guess we trust as well. So yeah,
sure. And that's one of the biggest things, man, is literally just coming down to trust. Can you put your hand on your heart and say, I think this person is going to act in good faith with me. Those are the only people you ever want to do business with, is if you can fully trust them. But if you'd like to have, a further chat, we do know a couple, decent startup-focused lawyers in the space that won't cost you an arm and a leg. I'm happy to connect you if you'd like, and so shoot me a message, and we'll see what we can do for you.
All right, really appreciate it. Thank you.
My pleasure. I think I don't see anyone in the chat, but anyone else, if there's anything else? Hopefully it's just clear and I've convinced you all to go buy Bitcoin and throw all your money in. Well, don't do that. No, I'm joking. But yeah, Alex.
I was gonna say, if anyone has a question, just feel free to you can raise your hand how Lucas did it. You can just type it in the chat. Like you mentioned, he's open to any questions. But I guess I'll ask a question. So you mentioned the Uniswap in your presentation. Can you kind of go a little bit more in depth on Uniswap and how once you maybe get started with these centralized exchanges, how like the benefits of using Uniswap and what it offers that a centralized exchange doesn't? Maybe touch on like the arbitrage possibilities and the liquidity pools and whatnot.
Oh man, going right into it. Love it. Yeah, sure. So I mean, Uniswap is very simply a way for you to trade assets without ever having to trust on anyone else. It's actually, I can probably show you. Let me just, oh, there you go. Nice little thank you. Let me know if you can still see as I open up Chrome here. It should pop up in 1 second. Can you guys see the new thing that just popped up, or is it still on Brave?
It's still on the presentation. You might have to
still on presentation. 1 second. Yeah. Let me do a new share. Chrome and share. Can you guys see the new screen now?
Yeah, that's good now.
So let me just open up the Uniswap interface, and I'll show you kind of, what does it look like? And, very simply for, am I getting on the meeting? Wrong meeting. What does Uniswap look like? Well, very simply, it's a site you can go to, and you can just pull up, accessing a wallet and being able to suddenly set yourself up to, trade without having to deal with any other, centralized company. So Uniswap works as well purely on the Ethereum chain. So the only token based upon Ethereum's programming language. So the type of tokens called are ERC20, which is just a very technical way of saying this is the format that we're going to send all of our code in. Not sure why Uniswap's not working here. Let's just go to, take away the swap probably. But if I go to app.uniswap.org, hopefully this will load. Apologies if my internet is just completely glitching out on me. But the way that it works with having your crypto on here, I think we're getting somewhere. My computer is heating up like a jet engine. Works using MetaMask. And MetaMask is very simply the way of having, as I mentioned, one of these desktop wallets, such that, this is installed within my browser. And MetaMask is just a way of me storing crypto on my computer. And again, there is there's the seed phrase, there's everything involved. There's, the way to have, your backups. But very simply, if I'm looking to log in, I just have to drop my password in here and it'll pop up here. And you can see I've got, some Ethereum sitting in this account. But from here, I would be able to transact, using any Ethereum-based token, and to use this in some sort of way, for example, with Uniswap. So I have about $100 sitting in here right now. So if, for example, I was looking to use Uniswap, very simply the way that I would do that is I would click connect to MetaMask. It's going to initialize. You can see here that now it's connected to this address. That is my public key. So that's the one that, if I was saying, Alex, send me $20 in Ethereum, he's able to send it to here. But if I was saying, I want to trade into, let's see, what's a token? Let's say I want to trade into something like 1inch, which is a DeFi. Oh God, how do I explain them? They are a way to find the best deals for crypto in terms of not paying high fees. That's 1inch. If I was looking to trade this, I would say that I want to trade, 0.03, for example, that's a lot of digits, 0.03, and I would get this. And now if I click this button here, I'm going to get this one that says swap. And so let's just say if I wanted to do this, I'm going to then actually go into saying, I am trading for this price, for this token. What am I receiving here? And you can see down here kind of some of the fees of, price impact and liquidity provider fee. But that essentially right there, that is the fee that Uniswap is taking for doing this transaction for me. So unlike working with something like, a Binance or such that might charge potentially higher fees, the total amount that I'm paying right now, if I want to do this transaction, is going to be 0.00009 ETH. Now, what does that work out to? $2, I think, something like that. Let's just take a quick look. I'm actually not sure off the top of my head. 0.9 ETH to USD, and that's going to cost me 0.17 US dollars. So I am paying 20 cents in order to do a trade, and I challenge you to find me a bank that's going to execute a trade for a different stock for 20 cents. Apart from if you get unlimited trades, lucky you. But this is the way in which I'm, without using any sort of organization, I'm able to complete a trade on here just using code. So if I clicked confirmed on here, it's going to pop up and give me probably a confirmed transaction over on this side, and then it will show me here's like some of the assets I've held in the past on here. And this is the way in which you would be able to do a trade completely without needing anyone else. So that's Uniswap. And one of the things that Uniswap is now beginning to roll out is that if, for example, you believe in the future of Uniswap, let's say that you think that Uni is a great way for the growth of the space. Well, you can actually buy Uni tokens, and as a result of that, you would then, as a Uni holder, receive the dividends in part based on what the transaction fees are within the pool. So it means that it's kind of like owning equity in Uniswap. If I owned X amount, bit by bit, the fees that I've just shown you, this 0.0009 ETH, when that starts accumulating, that gets paid out back to people that have their Uni. So it's a way of having a community-owned bank in a lot of ways. And so that's just one of the projects that I'm pretty excited about. I think Uni is a phenomenal one. Personally, I do hold some. And Uni, for example, did a really interesting way of actually distributing their token. They didn't give anyone a heads up that they were going to give out these tokens. But as of a certain date, if you had ever used Uniswap, that wallet would receive X amount of Uni tokens. So it was a way to say, we're rewarding the users that actually came in and used this before, because we want to give back to the community. It's meant to be owned by those that are actually, using the space, not by just, a VC group or, one central bank that holds 80% of the stock. So does that kind of answer, what is Uni? I think there may have been more to your question around kind of the other uses, but does that answer?
No, I mean, that's completely fine. The arbitrage and the liquidity pool is a little complicated. So we'll,
yeah,
yes.
I mean, it's an interesting space, right? It's like, so using DeFi is one that, where do you get into finding, arbitrage opportunities and things like this? Mm-hmm. If you're trying to find those now, I would just say don't bother. And the reason I say that is because there's more than enough bots that are up and running, trying to skim off tiny portions between exchanges. The best way that, if someone like any of you was looking to invest in the space and, make some money like that, other than perhaps through Lucas's, trading or algorithms, it's to find projects that you think will be here and take a look at, the team, the benefits, what are they trying to achieve, and put your money where your mouth is. Invest in the project and wait and see. As I say, like, it's not like you're going to make 100x on every project, but the ones that I've invested in, I do my due diligence. I do my research. I take a look at the team. What's their track record? What is the problem that they're trying to solve? Do they need blockchain? Do they need a token? What is kind of their plans for partnerships? And if you start saying, for something like, let's say, a Uniswap, it's a strong team. They got users before they were ever trying to get a token. They showed that it worked. They were solving a problem of high fees with using things like Binance. And so when they launched, I was fully on board to put some money in and, see where it's gone. I can't English anymore, where it's gone. And so, that was really where, when you start to looking at projects that you think make sense, and, as you get more involved in the space, you'll get a better sense of, what is next, right? Like, what's the next wave that I should jump on? You start investing in these projects early, and that is where you start seeing some pretty impressive returns. But again, what do I put money in now? For you guys, best thing is just probably putting money into, maybe Bitcoin and maybe Ethereum, and then leaving it. Where, my personal opinion, What do I think we will see this year? I think Ethereum will probably outperform Bitcoin in the coming 6 to 8 months. There's a major Ethereum upgrade that's coming later this year, which is moving very simply without getting into technical. Ethereum up till now has worked on the same system as Bitcoin, which is known as proof of work, meaning that in order for the network to run, it has to solve a lot of complicated mathematical problems, and then whoever solves it first gets the reward. What they're moving to now is a system that is a bit more economical and a bit more fairly distributed in some people's minds, called proof of stake. And I think, personally, when Ethereum actually does the switch onto this, I think we'll see a huge jump in price, because it makes a lot of sense for a lot of technical reasons. And it also works out to a situation where instead of huge mining farms being the ones that get the coins, as they do with Bitcoin, you actually end up in a situation where every person who owns Ethereum, again, receives a portion of the network fees. And I think it's more of an equitable system. And personally, I'm super excited about it. So I would say if you want cryptos to buy right now, Bitcoin and Ethereum are two that you probably can't go wrong with. And again, best way to do this is not to check the price on a regular basis, which everyone that seems to get into crypto does. Put it in there and leave it. There will be weeks where most of the people that I've told to get into crypto, you just don't check your address. You don't check how much money you have, because again, put it in there for projects you believe in for the long term, and check in a year or two. More often than not, you'll be very pleasantly surprised if you've picked the right one.
Okay, looks like coming, well, I think we're past the hour mark, but there was one question in the chat. If you just want to briefly touch about, Owen asks,
let's see. Owen, would you be able to talk about SushiSwap and the recent clash with Uniswap? Yes. Oh man, that was an interesting one. So SushiSwap and Uniswap just really are two very similar projects. SushiSwap SushiSwap came after Uniswap and essentially decided to build a different incentive model to get people to put their money into Sushi, as their token is called, instead of Uni, the token for Uniswap. A lot of the discussion around the clash between them came down to which one they felt benefited the space more and which one was just trying to get involved with the hype. A lot of people thought that SushiSwap was essentially just trying to clone Uni and then pretend that they were doing something better. But at the end of the day, it comes down to differences in beliefs of how money should work. At the end of the day, it's the same way that people have invested in different coins that in the past, different types of that try to be the new Bitcoin. So for example, to give a little bit more of a relevant example for everyone, Bitcoin had a dispute quite a few years ago now, where they said, we're going to do a major technical upgrade. We can either change, X and include a lot more transactions on a regular basis, or we can not do that and keep it very much as lower transactions, but more secure. And those that split off became what was known as Bitcoin Cash, with the idea that it was meant to be a faster system for peer-to-peer payments. And the original Bitcoin, BTC, as you all know, they stuck more with being more of a slower and secure network that's meant to be more digital gold. And it's the same way of kind of like a discussion around Uniswap and SushiSwap. They simply kind of look at it in different ways of where should the fees go, what is the ownership structure of the protocol, and really also who's behind it. The Uniswap team, for example, is well known. They're published their identities and things like this. SushiSwap came from an anonymous founder. So again, it comes down to like how much do you want to trust in the team versus the tech. So I would say that in terms of their clash, I think both of them are probably going to exist for a while. I don't think there's going to be one decentralized exchange that everyone piles on and says this is the one. Again, it comes down to personal preference. Some people like Uniswap because it's more reputable. It's been in the space longer. You may pay slightly higher fees, but you're more guaranteed to get what you want. SushiSwap, you might be able to, stake your money and essentially put, again, buy your tokens, put your money where your mouth is, and you might be able to benefit more from owning a portion of it, but it may be less likely to succeed because it's a bit more of a harsher model for users. So again, like the clash, and I hope that answers your question, Owen. Happy to chat again offline if you want to get a little bit more technical. it comes down to a lot of the disputes between major cryptos, come down to a lot of the disputes in terms of personal beliefs in the way that money should function. And it's not to say one side is right, one side is wrong. You know, we all have our personal beliefs in terms of, you know, what we think is fair. So I think, you know, if anything, it's another reason to always, you know, look at the team behind it, understand what their goals are and where they will say that they want to go. Because more often than not, you know, people will be very upfront. You know, we are looking to do X, Y, and Z in the coming 2 years, and the community gets annoyed when they do exactly that. And it's like, well, they said that what they were planning on doing. So I think, you know, crypto is a very interesting place to kind of really dive into the team and to understand, you know, what is it that they're trying to solve. And I would say if you can answer those two questions of who's doing it and does the problem really need blockchain, you'll do pretty well at picking coins that will last for the long term. Hope that answers it, Owen.
Yes, thank you.
Perfect.
All right. I think we're past the hour mark now. It was a great presentation. I hope everyone got the questions in. If not, I'm sure that you could shoot Sean an email or something. You could drop his email in the chat so everyone can see it. We do have one more thing from the Ben team. So if one of you guys want to go ahead and share.
Yeah, thank you, Alex. Thank you, Sean. That was a really great presentation. So we just wanted to say that Ben is starting a new initiative called the Ben Intercollegiate Crypto Fund. So if you're a student that wants to get involved in managing crypto and producing reports, getting access to analytics and data, you can work with other students in this new intercollegiate initiative where students will meet. They will produce reports about different crypto and put together a portfolio for Ben, like as if you were managing a fund. So we hope to give students some experience with trading. You'll get access to some really great tools like Masari Pro and enterprise memberships to get access to all of that stuff. And Sean would also love to talk to you at some other point about Penrose potentially being partners or mentors for this fund. We want to match students off and then kind of train them. If you, as a student, want to be an analyst for one of these crypto hedge funds one day, you can get some experience doing the Ben Crypto Fund first, as a student. So we have applications for that. And if you're interested, join the Ben USA Telegram chat and ask in there, because that's where we'll send you guys the link for the application.
Awesome. Happy to get involved. Only last thing I would say is if you guys are looking to get more involved as well and have particular ideas about where you want to be in the industry, again, shoot me a message. We know a lot of people that are hiring. You don't have to be technical, just have to be passionate, interested, and willing to take a stab at it. I'm not technical from my background. I've econ and finance, and ended up just reading a lot about the space and ended up in it for the last 6 years. So yeah, if you guys want to get involved or stuff, come say hi. My email's in the chat, Sean@penrosepartners.com. And yeah, thanks again to the guys at Ben. It's been good chatting with you all.